I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hey, thank you, Jim.
The federal budget, a lot of people said they're thankful that it didn't do much because usually when governments meddle, it leads to more problems than they solve.
Yes, but mostly I think it's because people were afraid that there was going to be some changes to things like capital gains or, new tax clawbacks, basically. And, I think they kind of chickened out there because, truthfully, they're forecasting deficits for, the foreseeable future. The Bank of Canada thinks it's too early to count Canada, out of the woods as far as the downturn goes in energy and the risks with our banking system and our debts and all that good stuff. So I think really it was kind of a chicken out because they really do need to raise revenue and find new ways to redistribute funds from some of the older sectors that have been used to a lot of largesse towards some of the deficits that are building all over. So I think partly it was just a concern over what's going on south of the border and how that might in fact affect us. So that could be a legitimate reason, I suppose, to pause.
Some of the things that they did announce, they want to create 40,000 childcare spaces. However, the country needs 1 million. 40,000 is kind of a teaser, isn't it?
Well, I guess they had to start. Here's the uncomfortable truth about all this. We've got this bulge of older people, and this is in all developed countries in the world, not just in Canada, but who are taking a increasing amount, disproportionately larger amount of the revenue available in the country, right? For things like healthcare, for pensions, for, things they've come accustomed to having paid. And the problem is that the younger generations are the ones that are struggling the most financially to get a foothold because of all that, because the boomers are staying in jobs longer, because everyone's saturated in debt, because housing prices are too expensive to be affordable for people to get shelter. Rents have gone up. So all this, you've got this huge pull now, just as we've got a rollover in revenues. And that's, again, sales have been declining, revenues have been declining for the past few years already. And that's part and parcel of, this time isn't different. That book about the debt levels when they get to certain levels in countries, how it necessarily slows growth. That and an aging population who's consuming less naturally slows growth, so they're spending less of their own dollars, but they're taking more of the government's purse. And I think that push and pull is going to be with us for many years to come, and it's going to be hard to keep both sides happy. In fact, I can guarantee you that they won't be happy because the reality is that we have to have cuts, and cuts are not popular in any age group.
Another thing that they're doing is getting rid of the tax credit for transit. Is that a big deal?
Yeah, I wondered about that. I didn't think that perhaps that was something about how many people are availing themselves of that particular cut or benefit, and they had to sort of look for something that was more widespread. But it seems to me that in a country that's trying to, or in a world more that's trying to get people on to more mass transportation, less congestion in cities, less air pollution, all that good stuff, that taking public transit is something we certainly want to encourage.
Why do you think a government that's trying to be green would do something like that? They're just desperate for the cash they would save?
Well, as I say, there's got to be cuts, right? And I think that the problem is that the the bulk of the political clout comes from this aging demographic. Maybe they aren't using public transit that much, perhaps. I don't know. I'd have to look at the math.
They're also phasing out Canada's savings bonds, a tradition for, I think, over 70 years. Is that a good move?
Well, again, with rates as low as they are, it's very difficult because people are having a hard time locking into those type of guaranteed product, even when, it may be the right thing to do for capital preservation. They're not that appealing because, as I say, rates are so low and there's financing costs and issuing costs. And if none of that is really absorbable in the spread and the margin, it makes it less likely that, it's worth the issuance if you're not going to attract enough dollars. So I think that might be part of what was going on there. It's part of the same pressures we're seeing in the Canadian banks, frankly. As the spread between their deposit rates and their loan, what they can charge on loans has come down over the past few years. The yield curve is flattening. That makes it much more difficult for them to take those sort of old school spread profits, and it has made them much more aggressive in trying to sell higher risk yields product to their customers. And I think that's part of the whole fiasco we've heard in the past few weeks about, the whistleblowers coming forward and saying the banks have gone crazy, pushing us to push product onto people. I think this is all part and parcel of this great strain in our financial system today, which is primarily driven by the demographic, as I've said, the aging population around the Western world, as well as the debt weight, which is holding back the younger generation and making it difficult for people to spend. And you've got this whole slump in global GDP, less revenue, less cash flow, less tax, less money that governments can funnel into the various things that people expected.
What about the statement some have said the government is digging such a deep hole, even if they tried to put on the brakes, they wouldn't be able to balance the budget for 32 years?
Well, I said that when Mr. Harper was still in power, and they were talking about, there was a couple of years there where they were basically, in the black, so to speak, but that was when, the commodities revenues were sort of at peak. And then I said, at the end of the commodities boom, we're going to have a hard time in Canada. We're going to have a mean reversion in our revenues, and that means tax dollars are going to get hit again, and that means we're going to be running deficits again. Well, that's exactly what's happened. If you look at it, the deficits began, as I say, under Mr. Harper in 2007-8 in that year, and we've been in the red, so to speak, ever since. And I don't think, as I say, I don't think it's this particular government's fault. I think it's a function of the main trends, which I've already identified as being, major weights on our cash flow, and that also, the increase in spending that's required for all the benefits and entitlements that have been promised. So I'm afraid deficits are going to be part of our future for the foreseeable future, indeed, for probably many years until we sort of right-size many sectors which are have grown inefficient and overweight in our economy, till we get some of the balloon through of the older people and the demand on the entitlements, until we get probably into a new growth phase in the world economy, which indeed may come thanks to things like green energy and efficiency, but is not going to come from the old school ways that Canada has typically got our revenue, and that is from the fossil fuels.
We'll have more with Danielle Park right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Danielle Park. Danielle, something I noticed lacking in the budget was any projections on how much money they might make from legalizing marijuana.
Is that right? Well, perhaps it's still a very controversial issue, and they're concerned that there may be some impediments to that coming. There's some concern with the new Trump administration south of the border that those policies might be reviewed. I personally think they shouldn't do that because, as I say, we need revenue. People are smoking marijuana. We tax alcohol. They increased the tax on alcohol and cigarettes in the budget. I think that this would be a perfect area to add more revenue into the system. We know people are doing it anyway. Might as well, capitalize on that, and it's definitely cash flow that's needed.
Well, they estimated something like $5 billion a year for the federal government. That would be an instant cash grab, wouldn't it?
Yeah, well, you mean to decrease the size of the government?
Well, no, but if they went and legalized marijuana.
Oh, right, yes. Well, incidentally, that is also something that I think all the governments in the world are going to have to look at, and that is that with the credit bubble mean reversion, with the demand dropping, revenues falling, government grew with the credit bubble, really got to be oversized, grew every single year in many countries over the past couple of decades. We really need to see some right sizing in that sector as well, just as we are right now in things like commercial real estate, in the retail sector. Week after week after week, we're seeing downsizing, excess capacity. We need to see that sort of shrinking of expenditures, as I say, that were from the old school model and move to a more efficient system. So that's also going to be an area where it's going to be difficult for government to focus on cannibalizing themselves, and yet I think it's essential that spending cuts are contemplated in every way possible.
Is it hard for governments to look at themselves objectively? Do we really need to do that? Do we really need 50 people to supervise a program that only affects a handful of people?
Yeah, no, I think it's hard for all of us to be objective, right, about our own particular hands that feed us, let's put it that way. If we're used to getting revenue or used to being, supported by something, it's very difficult to realize that times have changed and you need to downsize certain expectations. But I think it's going to be critical as we go forward here. Everything has to get more lean and efficient in order to get us through this bubble of population, and we have to start, as we've talked before, we have to start focusing on health instead of just treating illness, because our healthcare system can't function in this math very indefinitely. The amount of inputs that's required when there's great waste is just too much to afford any time, but certainly when you're in a downsizing phase in the economy.
If you want a healthier population, why would the government remove the tax credit for gym memberships?
Yeah, again, I think perhaps it's a function of not being widely used, and maybe they're looking at areas, I think they use those things sort of as populist tools to, say to people, hey, we're giving you something that you didn't have before, to try and make people happy with them as they're having to do some of this more difficult changes in other areas. So, I was one who liked that credit because our whole family has gym memberships, but I think from the numbers it's probably not something that's widely used. Again, you may think, well, if it's not widely used, it's not a big cost for the government, why would they cut it? I think that they're really just trying to rationalize and redeploy cash flow that is available into new areas that seem to be in demand.
Were you relieved that they decided not to increase the capital gains tax, which is already, I think, pretty monstrous at 50%?
Well, was I relieved? I wasn't happy with this government, for example, when they reversed the extended, where the CPP, where you had to work till you're 67, that was brought in by the Conservative government. That was a difficult choice for the government to make, but it's essential for all the themes that I've talked about so far in this call. It's important that people get their head around the math. we have not got the revenue that we used to have. People are living much longer. There's a savings deficit in all the pensions in the country, including the national pension. There's, under savings in the population. People are still carrying debt coming into their later years. They have to get it in their head that we need to work longer, save more. So I think that the obvious target for capital and raising money for the government here is going to be in the pockets of those people that do have assets and savings, because so much of the population has none. So that means that I think that the capital gains tax is going to be up for review. If not this budget, I think it still lies ahead. And I think that we're probably going to see more tax on real estate, probably should, because we've had this crazy period in Canadian housing, which has not done any of us favors in the end. It's leaving everyone with massive debt bubbles and prices and unaffordability, as I said, in shelter. So this is all going to be long-term costly for the country. While people are paying off these massive debts to acquire housing, they're not saving for things like education and for retirement. So I think, we have to get people's mindset changed around this idea that they can stop work in their 50s and live off, free money. Basically, very few people have enough savings today to do that. So they're going to be working into their 70s, and the government is going to have to look at new areas to tap revenue. And that means, as I say, you obviously can't get money out of people that don't have any income or very little income or, have no wealth stored in assets. Really, we grew a great deal of appreciation in various asset classes through the credit bubble, both through the stock market bubble that was, in 2000 and 2008, and again recently with overvaluations in equity prices and things like real estate. And so if we're going to increase revenue, we're going to have to get it from somewhere where it's sort of in these stored assets. So I know that's not popular. That's not what retired people want to hear. People are already having a difficult time living off the low yields that are available in the present world. But the math is the math, and we can't keep running, tons of money out with putting nothing in the pot. So I think that we all have to get kind of sober about that.
We'll have more with Danielle Park right after this.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, what was your impression of a Toronto seminar on how to become a millionaire by speculating in real estate?
Oh my, did you see any of the coverage of that last week? The marketing was, the usual shiny shoes and pocket scarves and all the usual, broker-dealer community that, makes profits by people buying and selling real estate, and then all of a sudden in property bubbles like now, they become seen as these, gurus or geniuses when in fact they're just riding the credit bubble up. I think it was a despicable display, that was, they charged people to attend. They had all the clout of the celebrities from the Home and Garden Television Network, many of whom are sponsored from the lending mortgage brokerage community or the realtors. It was, as that gentleman that attended and wrote the article, I attended the top of the Canadian housing market, so you didn't have to. I think everyone should read that. I didn't go to this particular conference, but I've been at conferences over the years, whether you're typically asked to speak at the peak of these cycles and things like the tech conferences in the late 90s and 2000, and the commodities and, precious metals conferences in the 07, 08, and 11 at the peak of those markets. So it's always the same pitch, it's always this reckless pitch to people about borrowing lots of money, use other people's money and get in, just buy, it never goes down. It's all about missing out on the upside. And of course, it ends up being catastrophic, because the market can't go up forever. And once all that sort of what they typically perceive is called the dumb money in the industry is enticed in and has levered up and hasn't got a nickel left that's liquid, that's always when, the top is finally made, and then you get big drops, which the people that got in later and are heavily levered can't absorb or tolerate. They have to sell. You get forced selling that hammers profit, the values of these properties. And then, of course, in the end, it's followed by lots of lawsuits and, people blaming each other and everyone saying, well, we were only salespeople. You should have known that, we weren't fiduciaries. We weren't required to look out for your best interest. It's just the usual suspects. So I thought it was important to point out that that is exactly what's going on right now in real estate in Canada. You've got a lot of people loading up right at the wrong time. And the very definition of an investment, of a financial speculation, is when the asset that you're buying doesn't produce sufficient income to cover the expenses while you're holding it. And yet, most properties that have been bought in, these hot markets over the past few years, they can't rent for sufficient to cover all the costs, the principal costs of the mortgage being a huge amount, with values as high as they are. Never mind that interest rates are low. The costs going out for your mortgage payments are extremely high because of the valuations. Then you have, the property taxes which have risen with it on top of all the other normal costs of maintaining properties. So, yeah, it's, a lot of people are doing these really self-destructive things again, just as they're older, can't afford to lose money. It's this real pressure cooker they've put together of, the central bank's low rates, pushing everyone into risk assets just at the time when they can afford to lose money the least. And we've got all the deficits in savings and pensions around the world to prove that this has been a very self-destructive chapter. And unfortunately, Canadians are in the worst shape they've been going into the next downturn of any time in the last probably 20 years. We are more indebted. We have less liquid savings. We're that much older, and our economy is in a secular downturn because of the movement, or the shift away from the fossil fuels industry. So it's going to be a rough patch. Every government that's trying to run a balance sheet or a budget in this environment is going to have a hard time. And I think it comes down to individuals appreciating that they can't keep trying to, double down on lottery tickets to fix these holes. They need to really rethink and make different plans and downsize their costs, downsize their housing if necessary, get rid of their debt, build up their savings, plan to work longer. All these things are the pragmatic steps that they need, but unfortunately that takes personal discipline. And many people just are not willing yet, at least, to hear that message.
Danielle, thank you so much for chatting with us.
Hey, thank you. Sorry for the raspy voice.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. Her website is jugglingdynamite.com.
You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.